Welcome to the thematic discussion brought to you by Livewire Markets, and today we are going to dream a little. We're going to think about and talk about how the market can go higher. That's right, a market can actually go higher. We're not going to worry about it going down. We're going to work out how it's going to fly through that old high, 6,800, and break a 13-year drought. Can you believe it? 13 years on and we still haven't breached that November 2007 level. And to talk about how it's going to happen, I've got Jason Kururangi from Aberdeen Standard and Allfrey from WaveStone. Catherine, I'll start with you.
Okay.
What does the market need? What are the couple of factors they're going to see us break out of this lock that we've been in for a while and take us higher, especially now that we're in a recession?
We need earnings growth to return. And in the last sort of 6 weeks, we've started to see positive earnings revision in the Aussie market, which actually is a really good sign for the market. Because up until now, because of COVID, we've just been in this negative earnings revision for most sectors, right? We've had the multiple expansion with the market. We now need the earnings to come back. So we're just starting to see it in some of the top 20 stocks. The banks have gone into positive earnings revision. Iron ore obviously has been as well, quite positive. CSL just upgraded earnings, but quite a few companies have come out and upgraded. And so that's a positive sign. That's what we need, earnings back. But we also need a vaccine. Clearly the market will love a euphoria, a successful vaccine. That would be a real positive for the market.
Okay, Jason.
I actually agree wholeheartedly with what Catherine's just said. The big one for us is some positive news flow globally around the vaccine. The election cycle in the US as well, if we can get a sort of positive outcome there and we get a consistent government that can execute on some fiscal stimulus policies a bit more on a more wide-ranging and probably more cohesive government. So if we have it across the various houses of parliament over there. And then also the third element, I would say domestically, is actually a recovery from Victoria. And as we start to see Victoria open up, I think that will provide a big boost to a lot of companies. So I think broadly pretty similar themes to
Okay, let's stay with that. Let's see the Victorians come out to play. Let's get a vaccine.
Yep.
Let's see some earnings growth. What then takes off in the market that drives us higher? Because the Aussie index is pretty concentrated. What's going to take us there if all that good stuff happens?
I think there's probably a couple of big ones in the what I would say the large cap index, ASX 200. If we were to look at the two sectors that have massively underperformed this year would be financials, banks specifically, and energy stocks. So if we could see an improvement in commodity prices globally, particularly oil and gas, then we'll see a recovery in that. Also banking, if we get a resolution of where the sort of bad debt cycle looks, and it kind of looks like we're muddling on through and people are getting more comfortable with the banks. And then probably the third one, something like a Tyro Payments, which is very leveraged to payment volumes in the economy. And when Victoria reopens and we start to see people out and about spending and hospitality, then that should get a real boost.
Don't use all your stocks up yet, because we'll come back to that. Jason's talking about a bit of black magic there.
Yes.
Oil, gas, banks, these things just don't perform.
Yeah.
Stay short those for the last 5 years and you're a winner. Mm-hmm. So what are those things that are going to take us higher? Is he right? Are we going to get into that black world of things that we thought we didn't have to invest in anymore?
Look, I think energy could take a little longer, right? Clearly we need the world to open up, right? And with the rising count offshore, looks like that's not going to happen for some time in terms of air traffic getting up. It's one thing to have planes flying in the sky, it's another thing for people to feel comfortable getting on a plane. So I think that's going to take a while. Banks are looking better in terms of the fact that, as you said, we're muddling through in terms of the bad debt cycle. The number of deferred loans, we won't really know until next year, but I think the government and the regulators are actually doing some positive things for the banking sector for a change, whereas the last 5 years it's been all one way. It's been very negative for the banks. So cheaper funding for them, for example, allowing them to put these deferred loans on interest only, that's a real positive. Responsible lending laws being watered down. All those things are quite positive for the banks, which should support them.
Okay, we'll stay with you. That sounds like you're feeling a bit bullish. Some of these things are actually going to happen, and you brought in a few more things there. The government spending plus
Yes.
loosening regulation around key sectors.
Yes.
So are you bullish going forward in this next 6 to 12 months?
Yes, I am. I definitely am. I think we can get earnings going again and earnings recovery. And you can see, like, even the consumer confidence number was really positive. I think the other thing that was positive in the last couple of weeks has been the finance numbers that came out. You know, investors have not been in the housing property market for 5 years. Suddenly, investor demand for credit is back. And I think at the end of the day, to get the economy going again, we have to go back to housing, you know, mining. These things have to move before we can reintroduce things like, you know, students in tourism again. So we need to get those other parts of the economy going.
Doesn't seem real though, does it, Jason? To be bullish at the moment. We're still recessed.
I
We've
know.
got huge budget deficits trying to get us out. There's a fiscal cliff. Things like this are happening. So how do you handle that, and are you bullish despite all those headwinds?
Look, I think we would characterise it as being cautiously optimistic. You know, there's been a really rapid recovery since March, and that's
You're talking
been-
about share prices.
Yeah, share prices specifically. Confirmed. Share prices, and you know that's been driven by a number of sort of government stimuli based, both fiscal and monetary policy decisions as well. So there's been a lot thrown at the consumer, and as Catherine alluded to, you know, that is flowing through into consumer sentiment, confidence. We've seen really good retail sales numbers. So what's going to propel the market higher, and why am I sort of bullish on a 12-month view? I think, you know, all of these things combine as we get through this, you know, nearer term kind of cliff, and as the stimulus starts to roll through or keep rolling through and into next year, I think there's a good prospects that we, with interest rates where they are, that the market's going to keep grinding higher.
Okay, I said hold your stocks for a bit. I'm coming back to it now. Give us a couple that, given that nice environment where things do go right, where's the leverage and how are we going to make money so we don't miss out?
I'm going to go back to Tyro Payments. I think that's a big one for us. They're leveraged to the hospitality spend in trade, so in hotels. As and when Victoria opens up, people will go back to the pub and people will start spending money. That will be a big kicker for their payment volumes. They also acquired Bendigo's or did a JV, or however you want to term the structure, with Bendigo recently, which should add another 20% to payment volumes, and that's come out in the last few days. So we're quite optimistic about that on a long-term view. And then maybe another one, maybe a little bit different, less of a domestic, but still cyclically exposed, as we see elective surgery start picking up. Cochlear should continue to benefit. They've probably consolidated the last couple of years around this sort of price and haven't been able to kind of push further higher, but we think there's a lot of legs to that, just given the improvement that we saw in market share and globally that they were taking pre-pandemic, and that'll flow through as we reopen with more elective surgeries globally.
Okay, Catherine, round out our portfolio. We've got a couple of stocks there.
Yeah.
You can put a couple more in.
In the reopening trade, we like, you know, things like Sydney Airport on the travel side. Still, I know that's a long term in terms of international travel, but at least if we can get domestic and open those borders, we can get domestic travel going. And Sydney
Sounds like
Airport
you want to
will
go
pick up.
somewhere.
Yeah, exactly. I want to go back to Queensland, where I'm originally from. But we like that one. We like Charter Hall as well, because of the fact that universities are looking to do some sale and lease back on their properties, and so we think there could be a lot of transaction activity in that area. And then next year, you've got this lovely chunky performance fee coming through for Charter Hall, so we continue to like that one as well.
Okay, let's finish up. Give us a forecast. Do you think we can get back through the old 6,800 on the All Ords that we saw in November 2007,
Okay.
all those years ago? Can we do it in the next 12 months?
We get a vaccine, we get some more government stimulus, right, and we get Corporate Australia working together, Team Australia, which is exactly what's happening at the moment. Open those borders, yes, we can get there.
You don't have to be greedy. Okay, can we get back through the old, can you join that chorus? Next 12 months, it's about 10 or 11% away.
I think when you reflect everything Catherine just said, and if you put in the fact where interest rates are, I think yes, we can, definitely. I don't have much more to add to that, to be fair.
So there you have it. The only way is up for the next 12 months.